Jonathan or Vero from Chambers.
They're on top.
Hello, everybody. This is Dan. Loving the weather. We should have had this outside somewhere.
Agreed.
Hey, Blanca.
Yes.
Communications just confirmed whenever you're ready for the countdown, they're set.
Oh, okay, good, because they're not answering. Like, hello?
Oh yeah, she was trying to get a hold of him.
Yeah.
Do we already have quorum, Blanca?
Yes, we're missing Sabrina. I don't see her, but she did say she was going to be on. But we do. Oh, here she is. Yeah. Yeah. So I can do the countdown now.
Okay. Good afternoon, everyone. It is 4 o'clock. I'd like to call this meeting to order. Blanca, if we can go through the roll call to establish quorum, I'd appreciate it.
Yes. Heron Govind, President.
Present.
Roland Gomez, Vice President. I think he's on there. Roland.
Yeah, he's on.
Daniel Dandia, Secretary.
Present.
Aaron Ronnie Rivera, Treasurer.
Present.
Veronica Gonzalez, Director. Sabrina Walker Hernandez, Director.
Present.
And Raul Resendez, Director.
Present.
And we have quorum.
Excellent. If you could certify public notice, Blanca, please.
Yes, notice was posted in accordance with the Texas Opens Meeting Act on October 23rd at 11:11 a.m.
All right. Good afternoon, everyone. Before we get started, I'd like to make a little comment. I know we've been, this is probably our 4th or 5th meeting now, I can't remember, but our meetings have been going kind of long, actually way too long. So I was hoping that we could kind of, keep them under 2 hours, maybe keep a mental clock, maybe 5-10 minutes per subject, and, keep things going on so we're all, abiding by everyone's, time. So that being said, do we have any public comments today, Blanca?
We have not received a request for public comments.
Okay. So then I will. I see other people on the call, so I'll open public comments if anybody on the call would like to speak. Nope. All right. Closing public comments. Moving on to agenda item A, consider the approval of minutes for the board meetings on September 29th, 2020 and October 15th, 2020.
Make a motion to approve the minutes for the board meeting on September the 29th, 2020 and October the 15th, 2020.
Can I get a second, please?
Second that motion.
All those in favor signify by saying aye. Raise your right hand, please. Aye. Aye. Motion carries. All right. Moving on to agenda item B, consider the approval of financial reports for August 20 and September 2020. Blanca, did you want to go through the difference, or did you want to do it on the next one with the final end of the year?
We have Mr. Chris Villarreal review the September 2020 financials. Then we can discuss the 2020 for your 2020 amended budget.
All right.
Hello, everyone. I want to go ahead and dive in straight to the September 2020 financials. I know we have August there for us, but since the statement of cash receipts disbursements has a bird's eye view on a month-by-month basis, we can see the August there already. So if you don't mind, I'm going to jump to September. This will also kind of cut time. So is everyone there? I can wait around. Want to talk about the statement of cash receipts, disbursements, cash balance for the period ending fiscal year 2020. Yeah, I just want to make sure everyone is there. Is everyone there?
Yep.
You should see all the numbers there all the way through September and year-to-date actual. Let me know if anyone is not there.
I'm good.
Okay. All right. So real quickly, you'll see that all the months are filled in. And now I kind of want to just go straight to year-to-date actual. As you'll see there, we have for the half-cent sales tax revenue, we collected for the year $6,483,300. It's a pretty good year. We originally had budgeted for $5.9 million, so we exceeded that budget even with COVID. Lease payments, we collected $98,161. Sale of property, $1,156. That really is just a reimbursement of closing fees at the beginning of the year. Investment interest, $136,000. And then we transfer some money from the Techstar accounts, $1.6 million. It's basically like a reimbursement back into the operating account for the expenditures on the projects that we had incurred during the year. And then also the transfer out interest earned in the restricted funds of $116,000. So all in all, net cash deposits in the operating account of $8,202,064. Those are our total cash receipts for the year. Okay. Any questions about those cash receipts? Okay. Now let's go into the cash disbursements for the year. Personnel expenses. We have spent in total $313,000. Our basic operating expenses total $91,000. The big chunk of that is going to be like utilities and office supplies. Next category is going to be maintenance expenses. In total for the year, we spent $45,719. Then we go on to the next page, marketing expenses. We spent $199,000 there in marketing expenses for the year. We had originally budgeted for $400,000, but this year, we had a kind of a skeleton crew, and now we're getting better back into our direction. So $199,000 in the marketing expenses. Contractual services, accounting, legal, legislative coordinator, that kind of expenses there, $141,000 there. Developmental expenditures, these are the incentives that we give to the companies out there. We have spent $676,000 for the year. We originally had budgeted for $1.8 million there. Capital outlay, these are the new bond projects that we have there. That makes it the bulk of those expenses here. We spent $3,043,000. Of course, and again, that goes back to, we reimbursed ourselves of $1.6 million, as I mentioned earlier. Next page, the EDC properties. This is basically going to be property taxes and bond payments. Year to date, we spent $2,900,000 there. So overall, we had a net increase in cash in our operating accounts of $789,000. We started out with $4.6 million, and we have $5,437,000 in the operating account as of September 30. And this is our unrestricted cash. Okay, $5 million. In the next category, you'll see in the supplementary section, you'll see that we've got unrestricted cash and we have restricted cash. Total cash $18,856,000 is our total cash. So that is our statement of cash receipts and disbursements. Any questions about this report? No? Okay. Next page is just supplemental information. Of course, this is unaudited. This is our balance sheet. You'll see, and again, the total bank accounts, 18 million, that it ties back to the page I was just talking about. Accounts receivable, $1.5 million. A large part of that's going to be the interest and late fees that we bill out to Santana. And then we got our fixed assets at $7 million. And then we got other assets at $13 million. A large bulk of that's going to be the note receivable from Santana. So total assets, $40,963,000 of total assets. Any questions about our total assets? Okay.
I have a question. This is Dan.
Sure.
But Santana is the one that's not paying, correct?
Correct.
So these are projections on the positive for someone that's not paying?
These are what they owe us. So Santana, we have two notes out there with Santana. The original principal balance was $4.2 million on one note, and the other original principal balance is $9.4 million. We refinanced that back in August of 2018. Okay. And if you go back to the accounts receivable section, of that $1.5 million, there's a large bulk of that is that in interest and late fees. And we're going to talk about that a little bit in the next couple of pages. And you'll see a breakdown of that interest that we've been billing since the time we refinanced back in 2018.
Okay, sounds good.
Okay. All right. Next page is the liabilities. Okay. We have current liabilities, which is what's our next current principal portion that we're going to pay in our long-term debt bonds. So $1 million, $1,036,000. And then you get your long-term liabilities, which is a long-term portion of our bond payables at $26 million. 26 million minus the 603,000, which is a net pension liability, which is an accrual from the prior audit. But really, if you really look at that, we got approximately $26 million rounded of the long-term debt. So you got $40 million of total assets, and you got $27 million of liabilities. So you got a positive, and then you got your equity, which is the difference of $13 million. Basically like your equity. Any questions about the statement of assets and liabilities? Okay. The next page is going to be the breakdown of the accounts receivable that I was just mentioning. You'll see there it's got current, 1 to 30 days late, 31 to 60, 61 to 90, 91 and over. This ties back to the balance sheet that I was just talking about. So in the total section, you'll see $1.5 million. But a large part of that is going to be what we're billing out to Santana for interest and late fees. And they haven't paid us since almost a couple of years. But we're invoicing them interest and late fees. Okay. Any questions about this section?
Hey, Chris,
No.
Raul, just
Yes,
a
sir.
quick question on the comments you just made. So if we're accruing interest and penalties,
Yes.
let's just say whenever that time comes, we have to write off the notes. Would that just give us a bigger total?
Yes.
Even though, I mean, in essence, it was just, I guess, is it just for taxation to show more losses?
Well, I mean, they still owe us that.
Sure.
We want to keep this, from my understanding, of course, there's a legal side to this, okay?
Right.
But from my understanding that we're a second lien holder on these notes. So I understand that banks have the first lien, but I think there's a demarcation point in the future where we can become a first lien holder. And so if that time ever does come, that we still have these on the books, and maybe we can get reimbursed, whether it's a new buyer of the facilities or whatever.
Got it.
But I think there's a legal aspect to this where we probably need to get more clarity on that from a legal standpoint. And I think it'll be good for the board to know that.
Thank you.
Okay, so that answers my question. That we carry it as an asset. So it'll behoove us to have it there when we have a little more closer to getting as a first lien holder.
Correct. And that's where we need to get a little bit legal, a legal opinion, legal clarification, so we have a clear understanding of when we can come and get reimbursed for this, even if it's
just for
100%, maybe even partial.
Just for everybody's reference as a reminder, the date for the compliance period is over, April 24th.
I'm sorry, I can barely hear you.
I'm getting some background. So just for everybody's reminder, the date the compliance period ends April 24th, 2022.
Is that when we become the first lien holder, or? I'm sorry.
Wait, I thought it was April 2022.
Okay, can you repeat and say what's the significance of that date again?
So I think Ron's breaking up there.
Yeah, I'm getting some feedback. Can you hear me okay?
There we go. We can hear now, Ron.
Okay. So yeah, that date here, I think your thing is doing that buzzing again, remember?
Am I buzzing again? Sorry.
Yeah.
Does it stop now?
It did settle a bit, but anyway, it is the subordination agreement. The compliance period that ends the subordination agreement is April 24th of 2022. So at that point, we could move forward legally to be the first lien holder at that point.
Right. So I guess from a cash flow standpoint, and if you look at this fiscal year, we still have positive cash flow, even without the collection of that note receivable from Santana. I'm not saying that's good or bad, but it's still something that we can, if the auditors allow us to leave the books in good standing, so that when we can weather the storm through that point and maybe collect that until that time.
Understood.
All right. Any other questions about the September fiscal year end financials? These are unaudited.
No. All right, then I'll entertain a motion for approval of the August 2020 and September 2020 financial reports.
I'll make a motion. And just that unaudited financial reports.
If I can get a second.
A second.
All those in favor signify by saying aye or raise your right hand.
Aye.
Aye.
Any opposed, same sign. Motion carries. Okay, and going on to agenda item C, consider approval for the end of the year fiscal year 2020 budget. Is there anything else you needed to add, Mr. Villarreal, for the end of the year?
No, other than I think from an auditor's perspective, I think they kind of wanted to see maybe an approval of the budget So I think it's probably best that we get an approval of the year-end budget.
Fair enough. Does anybody have any questions? All right, I'll entertain a motion for the approval of the end of the year fiscal year 2020 budget.
Make a motion to approve.
I think, Roland, did you second?
Second that motion to approve.
All those in favor signify by saying aye, or please raise your right hand. Any opposed, same sign. Motion carries. All right, moving on to agenda item D, an update on the 2019 audit. I believe we have a presentation, correct, Blanca?
Yes. I am going to share my screen for Mr. Orozco, and I believe his assistant, Mr. Mocayo, as well, is on the call. So 1 second as I share my screen. Okay.
Oh.
We'll see it.
That looks a little bit, okay. I think I'm gonna be using mine here. Good afternoon. My name is Luis Orozco. I'm the auditor for the Economic Development Corporation. Also, Mr. Jesus Moncayo is on the line as well. He is my assistant, and he's been involved in the conduct of the audit up to now, all through the course. So we weren't really sure exactly how do you want it, because this is considered an update of the audit. So what we did is basically we're presenting to you what we call it is the latest draft of the financial statements. Again, considering maybe the item is a little bit different from our regular presentation, I would like to basically, on my idea, just to cover maybe some of the major components that we have right now of the report, and maybe just discuss with you what has been the process of the audit, and what are the items that we have discussed with management, and perhaps maybe at this particular point can discuss one of the items that is our concern. If that's okay with you, again, doing this formal presentation, would that be fine, or is there another way you want me to go about it?
That works perfectly, sir.
Okay. What we have before you is the financial statements. Again, keep in mind these are the financials as of the year ended September 30th, 2019. The financial statements were converting what we call a governmental type of basis. Eventually, what is going to happen is that these numbers will be incorporated into the city's audit report, and because of that, we're having actually to present the financial statements in a little bit different format than what probably you're used to. And what I'd like to do is maybe first going over, I believe it's page 4 of your, on that particular report. You will see these are the numbers that we consider to, is on page governmental. I'm sorry, I apologize. Yeah, no, that is correct. The general fund, yeah. The page 6, or page 4, I'm sorry, presents the governmental funds. You only have one particular fund in this particular case. We don't have certain items here, but I'd like to go, again, this is normally what we present. The governmental funds will have, we call it total assets, the total liabilities, and the total fund balance. We don't report in these financial statements any form of fixed assets or any long-term debt. I'm going to just go over again the numbers that we have right now, and just again, keep in mind that the way we present this format is because eventually these numbers will be included on the audit report of the city of Edinburg. The total assets as of September 30, 2019 is 33,408,877. The majority of those numbers being composed of your cash and your note receivables. It was a discussion there earlier today. And there's some restricted cash of 14,902,963. The restriction of that.
I'm sorry, am I on the right page?
No, you got to scroll down to the next schedule, schedule C1, which is on page 6
4
of the PDF.
Oh,
That one right there,
page,
yes.
Okay, I'm on page 4 of the report.
The other, okay. Mm-hmm.
Okay. What we're doing basically, again, one more time, is presenting to you the financial statements on a governmental format. And the format normally goes into, we present what we call first the fund level financial statements, and then we jump into what we call a government-wide, which includes everything and the everything that basically that is included on the financials of the corporation. I just wanted to mention this particular format and just give you some of the numbers. The main ones you're probably they're probably more important to you are the ones on the governmental wide. But just again, just to go over just these particular documents, the page 4 again is the balance sheet of the governmental funds. The total asset is 33,408,877. We have total liabilities of 10,858, and then we have a total fund balance of 33,398,019. What you're not going to see here again is your fixed assets and or any of your long-term debt. And we go to the process of what we call it doing is all of those entries, I guess, to convert these financials into more like on an accrual basis, where you're more like used to it. And for that matter, we include a particular schedule which is next to you on page 5. I don't know who's moving it. On the next page, not on. I just wanted to basically just show you what that is for. Okay, there you go, that particular item. These are all the adjustments that we make in order to convert the financial statement from what we call it from a fund level basis into more like on an accrual basis. And there's a lot of adjustments there. My intention is not to go through all of those. Again, the whole reason why we're doing this is because eventually all of these numbers will be combined with your with the City of Edinburgh's audit report. Once we do that, then this is only the balance sheet portion. If we go into page 6 of the report, we get the revenues again. We see the revenues and expenditures and other items. Can you move to the following page, please? Not going forward, not going backwards. This report again shows on a fund level basis the revenues and expenses and expenditures and other items of your financials. Again, keep in mind this September 30, 2019, we have total revenues of $6,684,275. We have expenditures of $5,986,040. We have certain items that we consider to be other financial sources and uses. One of them is the issuance of bonds, $10,840,000. That was an increase. And then they had a sale of real and personal property. You have some sales of $1,100,862. The total of those give us a total of $11,940,862. The difference between what came in and what went out in this particular case is an increase of $12,639,097. We started off the year with $20,758,922. And when we add the $12,639,097, we end up with a $33,398,019 in the fund balance. That's the same number that I just reported to you on the other schedule. The item that you see on page number 7, I don't know if you can scroll it down again, please, one more time. Then we go through a series of adjustments to, again, convert the financial statements from a fund level into an accrual basis. And then all of those adjustments that you see in there at the very end, that's going to give us what we call the final total on the government-wide. I wanted to go through this process to you just for you to more or less understand the format of the financial statements. Now we're going to go back again into page 2 and 3 of the report, because basically now these are the numbers that includes everything. It includes not only the numbers that I just read to you, but it also includes your fixed assets and your other liabilities or your long-term liabilities. Once we do those adjustments, then we come in to this particular schedule. We call this the government-wide financial statements. These are probably the numbers you're more accustomed to see. And I'm going to read some of the numbers for you. Again, keep in mind, this is as of September 30, 2019. We have total assets of $40,497,673. That includes the items that I just read to you earlier on the other schedule, plus your capital assets, your land and equipment. Then we have certain items that we consider those to be deferred outflows of resources. Most of those items are basically related to your pension plan items. And what we do there is we get certain numbers coming from your for administrator of the plan. And just because there's certain standards that ask us to put those numbers in, that's the reason why we do it in there. We have a total of those of 167,953. Then we go to the section of your liabilities, and the total of all of those is 28,600,140. As you can see right now the bonds payables are included in there, as well as some other liabilities like the net pension liability and the net OPEB liability. Those are included there because, again, of your pension plan and the numbers that we received from the administrator on that. In other more items that we consider to be deferred inflows, new section 38,957, all related to your pension plan. Then we have to the final area, we call that the net position. This is the equity of the corporation as of September 30th, 2019. The total of all of that, the net position is 12,026,529, I'm sorry. And the breakdown that we have on top is just because we need to make sure that obviously some of those money, if they are restricted or if they are invested on your fixed assets, we include it all in there as part of the standards of how to report those numbers. If you want to determine what is the equity of the corporation as of September 30, 2019, including everything, that is the line item that you see right there, the net position, line item 3,000, and then it's 12,026,529. The following schedule that we have on page 3 is how we report our revenues and expenses on a government-wide basis, including everything. It's a little bit different from what I just went through earlier, only again because the format of it is on a governmental top basis. The way they do it is they start off with the expenditures on the first column. In this case, we have 5,310,859. Then we reduce any form of revenues that we obtain to, you can call it a help, subsidize some of those expenses. In this case, we have 2,648. Before we start actually generating in the form of revenues, we have a deficit of 5,104,111. Then we end up reporting all of those different items that the corporation receives, the different sales tax, investments, receivable in the income, miscellaneous income, any item that perhaps was not necessarily part of your operating income. In this case, we have a loss in the sale of the assets. All of that will give us a total amount of 5,931,354. We take that money that came in, we reduce the 5,104,000. So we have an increase of 827,243 for the year. On a governmental-wide basis, we started off the year with 11,199,961. We had a very small adjustment of negative 675. So that's the net, again, your net position being your equity of 12,026,529. What I just read right now are the financial statements again. Once on a fund level basis, then we make adjustments, and then we come into this what we call the government-wide financial statements, includes everything else. What we have been doing lately is to work with your with the city, and to try to come up with some of those numbers on what we call the pension plan. We went through the process of inquiring more information, inquiring more items in there, and up to yesterday, we were still making adjustments. We do not foresee at this particular point in time making any additional adjustments on the financial statements. I believe, and again, Mr. Moncayo can also, I guess, indicate if there isn't any or there's more. But I believe there is no other more adjustments to be included into the financial statements as of this particular point in time. Am I correct, Mr. Moncayo?
That's correct.
Okay. Again, the latest financial statements they're working on it just to bring all of those numbers that I just read to you. When it comes to the pension plan, all of those for inflows and outflows, the liability, that's what we're working on with the city and the corporation to bring all the numbers and put into the financial statements. There were some other adjustment entries that we were working on with them, but I believe already we got those all cleared. When it comes to this particular report, we do have some notes to the financial statements, and those start on page A and on. Most of the items that we have in there, they're pretty much standard. We haven't added any new items coming from last year to this year. I know there's a lot of information in it. My intention is not to go through every single line item. There was one particular item that I would like to focus as soon as we move from the financial aspects of it more into the comments and our concerns and our findings that we have. We're probably going to be concentrated on that page 13 and on the item that you were earlier discussing on that no receivable. But as far as the financials, the only thing that we are missing on that particular report at this point is our opinion. The opinion that we're going to be rendered on the financial statements as of September 30, 2019. We believe that in the next 4 or 5 days, we're going to be included that opinion in the financial statements. We just need to go one more small little, we can call it an item, or either with your management or maybe with your city attorney, for the Economic Development Corporation. The rest of the items that we have in there, they're probably schedules that are required as part of the standards, and we have included some of those in there. Again, as far as I can tell right now on the audit report, the only thing that we don't have included in there is the opinion on the audit. And that will be part of my discussion that when I move part of the financials to the other items, I'll give you reasons why we don't have it there yet. But what I'd like to do is, from the numbers aspects of it, is move on to what we call it, some of the comments, I guess, that we have and all concerns at this point in time. If that's okay with you, can I move on from this particular financial aspects into the other area? Or do you have any questions at this point?
Anybody, any questions? Please continue, sir.
I have a question.
Sure.
On the allowance for uncollectible, how did you determine the $1.1 million?
Well, believe it or not, that is going to be also included as part of our discussion. Let me also, okay. Mr. Macayo can probably give you a better understanding, but this is the way let me go back into the page to the receivable. The way I understand is there was a 3% allowance. Am I correct, Mr. Macayo? Was it 2%? 2%. You want to jump on this one?
Okay. Basically, we had a 2% allowance for uncollectible for the total of the $15 million receivable, which we had a total of $300,000 allowance for uncollectible. That balance is being carried over. The adjustment we suggested to increase that amount to 1.1 million in this case is we considered all the late fees and accrued interest that occurred during the fiscal year, and considering that we're October 2020 and they haven't made any payments on that, we had those balances initially as current receivables. Considering that they weren't received within the 12 months after the fiscal year end, we decided to move them over to non-current receivables, and additionally, we decided to increase the allowance for uncollectible amount by that same amount. That's how we came up with the 1.1 million.
So do you recommend that we continue to invoice them for the interest and late fees going forward?
Yes.
Correct?
Yes.
That is correct.
Thank you.
What I would like to do is, again, I know that our intention, again, was to submit a document where we consider it's like a little summary of the audit or what's transpired from the beginning all the way to the end. But basically, I'm going to jump into the main topic of our conversations. I guess lately, and that will be with management. That will be with the city attorney also, even with the owners of the company. We do have a concern regarding this note receivable on the Santana textile. This is more or less what we have based from a contractual aspects of it. We do have the documentation as to what came about or how the receivable was created, all the way back from the 2015 all the way up to now. We did also, we met with the previous auditor as far as the balance that was there carried on the financial statements of the corporation. We have also obtained a confirmation from the owner of the company regarding what was the balance on it, and also with the penalties and interest associated with the late payments or the payments that have not come through. And on top of that, obviously, we had some other additional conversations. The only one that I haven't actually had a conversation of up to this point is with Mr. Sutherland, which happens to be maybe a consultant that perhaps maybe have better insights on this receivable. Our concern is very simple. We don't have a solid basis for, at this point in time, to see if the corporation will be able to collect the receivable in its entirety. And the number that you just, the question that was asked earlier regarding the allowance, it was just basically right now is a recommendation on a certain number based on some facts and circumstances that happened up to now. And we decided, well, if they haven't done any payment, well, perhaps we can increase it at that point. But to be honest with you, we don't have 100% a recommendation as to what the allowance would be. All that we know right now at this point, again, is that we don't see how the corporation at this point in time will have a way of getting or making that receivable come true. There is obviously a lot of contracts. There's a lot of, I guess there's been a lot of meetings. I'm sure there's been a lot of communications with the owner of the company, and even plans for as to what's going to happen once the corporation has the ability of obtaining that or becoming the first lien holder after that compliance period ends. But we need to actually make an assessment as to up to this particular point in time, at the moment that we are reissuing the financial statements, and we don't have a way of indicating to you, the receivable will become valid, or you're going to be able to at least recoup either the majority of this receivable or even the net of the receivable after you subtract the allowance. All of that basically is all up in the air. There is a big uncertainty of what's going to happen at the moment that the corporation becomes a lien holder, the first one, and what's going to transpire between now and then. And then when that happens, obviously, I know there are some plans for working with the company to maybe perhaps make it work. I visited the facilities early today, and I've obviously with the corporation personnel and one of the what happens to be one of the personnel from the company. It appears that obviously the entity or the company has not been operating for a while. The equipment looks in good shape. But all of that again is just for me to formulate a better idea as to what's happening with the number and what could possibly happen almost at the end when the corporation finally takes over, I guess, control or better control of the situation. All of that is up in the air. So our main concern is if for any reason regular the standards indicate if we know right now that you're not going to be able to collect, one of the suggestions is write it off or create a bigger allowance that you have right now. If there's a possibility, there's a collection possibility in the future, what we can do is maybe just create a disclosure and then just indicating the more information that is needed for the readers of the financial statements to have a better understanding of the situation. So as of that particular point in time, since we don't have a way of basically indicating to you or make a recommendation to you, I think that ultimately what's going to happen is that we are going to maybe just put as much information as we can on the notes of the financial statements, as much as we know regarding the situation of between the corporation, the company, and what's going to happen in the future, and basically to see what happens. But it is a big concern on our side. Was the only reason why I want to meet with Mr. Sutherland, because it appears that he is a consultant, that he's been on the item for almost a year, as I understand, and perhaps maybe he can give us a better insight as to, from a legal perspective, what's going to be the recourse for the corporation once you're able to do anything. But as you can see, obviously the number is still in your financial statements. There is an allowance included in there. The only thing that we have, again, the concern is the certainty of you making it valid, and sometime in the future. That is our main item right now that we have. I think maybe Mr. Moncayo had another comment, I guess, when it comes to maybe doing some, as we're doing some of the field work, and I'm going to let him actually go through that. But as of this point, and maybe the item that I just read back to you, do you have any questions that I can answer for you?
So, the only main concern is the uncollected from Santana Textiles, correct?
That is correct.
Okay. So then, as we're filing it right now, you guys just moved it to uncollected for the audit, and then we just continue doing it kind of the way we've been doing it until we can, get Dub Sutherland on there and figure out a final recourse.
What we've done is basically just increase. We increased the allowance for uncollectible. I think it was only by the amount of the penalties and interest. It was a recommendation. Obviously, it doesn't cover all the receivable. If it's only a certain percentage, obviously, of it. And the only thing, I don't know exactly what Mr. Sutherland is going to actually indicate or is going to add more to what we already know. Perhaps maybe he'll have a better insight, or maybe give us a better understanding from a legal perspective if this is not going to be considered a complete loss for the Economic Development Corporation. If it's not, then at what percentage are we? Are we in 20%, 30%, 40%, 50%? Based on the legal recourse that you may have or what's going to happen in the future. Maybe he'll have a better perspective of that.
Ron, did you want to say something?
Well, yeah, I do have an administrative question back to, with Dub. I just don't know. I mean, hopefully he can answer that, but as kind of a consultant that has also been brought in to kind of help, I don't know if he could get a good grasp on our feasibility after the compliance period in terms of a percentage, but hopefully, and we'll work with you. So, but Mr. Orozco, I do have an administrative question for you. So, and this is also for the board's knowledge. So now that we're obviously doing this in a much more transparent way of aligning the EDC with the city in terms of an audit. So November 17th, that is when the city council is slated to accept the total annual audit. So we're kind of working backwards from that. So to get there, it is my understanding that the EDC board also has to acknowledge the presentation of your opinion. So I believe that's the case. It's not so much an approval; it's more of an acceptance of or acknowledgement of that. But my biggest question is, have you solidified your opinion to where they're in the position to be able to do that? Okay. And if not, I think we might have to call a special meeting for that sometime prior to the 17th when you're ready for that.
Let me also go back and maybe answer that with, I don't expect, again, considering what we know about the receivable and what we're able to do at this point in time, I don't know exactly what more information Mr. Sutherland is going to add to the already situation that we know. I am considering it again of when it comes to the entity. We do have the concern, but at the same time, I also understand maybe of how the situation is going to unfold at the later future. And I think I'm going to be comfortable with making a lot of no disclosures regarding that. Now, based on that, then my anticipated opinion that I'm going to be rendered on this financial statement will be unqualified, unmodified, unmodification of the report. What that means is basically you're still going to get the clean opinion. The only thing that perhaps maybe what I wanted to do is, if anything in the next days there is going to be so tremendous, or maybe I don't know exactly what kicking Mr. Sutherland can actually indicate to me, but if we get a document in our hands right now saying the corporation will not collect at all anything, will not have any form of legal recourse, will not have anything, perhaps maybe the opinion will be different. But again, we'll have to have something that will say you have a completely loss on this receivable as of this particular point in time. But if we don't, we will more likely go with the no disclosures, and then the opinion will not be different. Did I explain myself or no? Kind of. Okay.
I think so. Again, I just want to have these conversations so that the board can be informed of what options that they have. But, you know, hearing that's something for you to consider in terms of, you know, do you as a group feel comfortable?
And I guess for Mr. Orozco, so I just want to be clear, like the numbers, financials, all that you don't think are going to be different, just if we have a recourse on Santana or not. That's kind of the only thing that's
the only thing that could possibly make a difference on the financial aspects is if we get a document right now indicating that the corporation will definitely lose in the deal 100%. And then the number will have to we're going to have to play in there and make an allowance a lot bigger, and your financial will probably have less value. Now, again, I think that's not going to be the case. Again, I'm assuming this at this point in time. Therefore, we're just going to put a lot of disclosures on the notes or the notes of the financial statements, and the opinion will probably more likely will be unmodified. Yes, but I guess based on what your question is, yes, I don't anticipate the numbers to change. To be honest with you, I don't. Even after having a meeting with Mr. Sutherland, it don't have to be too drastically, but I think that we already have all the information that is, or what is transpired up to this point in time. I still like to have the meeting with him, and he suggested that maybe this Friday, he will be making himself available. I don't know if there's going to be any new information that he can provide on when it comes to this thing. But I do wanted to express to all of you again that there is a concern. There is a concern in this receivable.
I think all of us have that concern since day one. And I know Ron, Blanca, Brian have done a lot of legwork on it, I do believe we'll have some kind of recourse and after that, you know, April 2022 deadline, because I believe we still own the asset, things like that. So we'll be able to liquidate some stuff at that point. But I don't have any more questions. Maybe Mr. Orozco, I don't know if anybody else does.
This is Dan. I have a question.
Go ahead, Dan.
And I'm sure if you guys have, Ron and them probably tossed this around. Mr. Orozco, what are the pros and cons of carrying this as a loss versus carrying it as an asset? I know I asked Mr. Villarreal, but what's your opinion on that?
Basically, it's all a matter on your financial statements. You will lose equity at the end. If for any reason, if you decide to basically let's say for instance you want to either increase the allowance or write it off at this point, you will incur the loss. And then if there is any recoups of the receivable later on, you will receive it as an increase of your revenue side, and that'll increase your equity. So it's supposed to actually wait. What's going to happen is that if for any reason in the future, this receivable does not come through, basically you're going to have to write it off at that point in time, and at that point in time, your equity will go down. I don't know if I answered your question. I sometimes I tend to answer more like on a financial aspect rather than...
Yeah, well, no, I understand what you said, what's going to happen in the numbers, the positives or negatives. But my specific question is, what are the pros and cons? Do we get, I don't know, do we have access to more funding or tax breaks, or I don't know if we show it as a, or does it liability? We show it as a positive and then it's really not there. It's just on paper. Or, that's my real question.
Well, you have a receivable. It's better to show it off on your financials, obviously, because that'll alert everyone there is a receivable out there pending, and for everyone to work on this and to make sure that you do the process to collect it, to make sure that you receive those monies. It's always good to have it on the financial statements. What are the benefits of actually having it in there? If that's gonna help you more or obtain some more benefits, I wouldn't be able to answer that question other than maybe your management of the corporation. At this point in time, what it basically just doing to you is a reminder that you have a receivable pending out there, that you need to do all the efforts to collect it. And obviously, if you write it off, it'll disappear from your financial statements, and I guess legal-wise, you can still go after it, but it's just not going to be there for you to see it.
Okay. Yeah. So then I gather it's best to have it on the positive side, so that we show how long we've been counting on it and going after it. And keep it on everybody's radar versus just getting written off.
Exactly.
Thank you, sir.
Again, my intention was again to give you a general perspective of what's on the audit report and obviously our concern. I think Mr. Moncayo has another item to discuss. I think that's the case, but I'll let him speak. But I think also what Mr. Garza was indicating is the way it normally happens is that we do need your blessing while the city needs your blessing on the financial statements in order for them to incorporate it finally on their audit report of the city. And there is an anticipated date right now, November 17th, Mr. Garza?
Yes, sir. November 17th.
Okay, at the 17th. And perhaps maybe the information that we had just presented to you in the items, I guess maybe they were asking me earlier if that was okay, maybe if the corporation would like to have some form of an approval for this. And I just indicated to them that I just wanted to be clear where we stood on the item, and what is the main matter of concern. And that was from my perspective. Then up to them, it'll be up to the corporation to decide whether they want to do that or not. Mm-hmm. I'm okay with it. I guess I'm saying I don't anticipate any more adjustments to the numbers. We do need to maybe just include our letter in there, our opinion. And I don't think that we have any other, I don't know if we have any other schedules to present in there. But as far as the numbers are concerned, we won't suggest any more adjustments to.
So this might be a question for Omar. If we accept the 2019 audit pending, the final review, because I said this is a draft on it, is that allowed? Like basically we can accept it and short of Mr. Orozco coming back and saying, hey, we have to change all these numbers, it stays accepted? How would that work?
I'll put it this way: if the audit report could provide what it intends to do in terms of the treatment for that allowance and any kind of additional notes, and provide that information now, I think it might be easier actually for the board to go ahead and move to accept the audit report barring any changes that may happen in the published form, because it's the information's already been given, through a presentation. But if I'm understanding correctly, I think there's still a little bit of work to be done in terms of crafting the disclosure or finalizing the opinion on that, in terms of talking to Mr. Sutherland, and maybe some other activities. But if that's the case, right, if the auditor is not prepared to give kind of its final treatment on this issue, my suggestion would be to wait until we get that information before the board moves to accept.
Okay. So I guess from what Mr. Orozco is saying, he doesn't believe that anything's going to change, but you're suggesting we should still wait just in case.
No, and I mean, I guess, correct me if I'm wrong. My understanding is that the financials might not change, but there's a disclosure note or there's a potential for change after speaking with Mr. Sutherland. And given that there's at least some work to be done in terms of the disclosure, it's probably best to wait.
Okay. Mr. Orozco, when do you think you'll have that final with all the disclosures?
I believe Mr. Sutherland indicated that he's going to make himself available this Friday. So we can potentially have, as soon as we finish with him, we can have it ready for you on that day.
So then, Ron, Blanca, if we did a special meeting next Tuesday, would that work? Or how does that work?
I think if we are going to wait, what we do is ensure, because Mr. Sutherland sometimes can be, his schedule varies a lot. So I want to make sure they connect. And we'll work with Mr. Orozco to finalize the report. And then the report will be then in the packet that we put out. So, and unless there's any other business items, we'll have ample time to review the packet. And then it'll be just So I'm thinking it may be safer to look at Thursday, just to be safe that we get the posted requirement. I would prefer that the report be in your packet ahead of time, just so that you have, those 2-3 days to review.
Yeah. Besides next Tuesday's election day, guys.
Yeah.
Forgot about that. You're right. Okay. So I know we really wanted to get this accepted today, but without those final disclosures, I think I'd advise of council we should postpone till next Thursday. Does anybody have any objections to that? No. All right. Do I need a motion, or how does that work on?
No, there's just no action to be taken, so we can move on to the next item.
Okay. I appreciate your time, Mr. Orozco and Mr. Montoya.
Okay. I do want to mention to you that if for any reason the board does have any form of concerns or anything, or would like to have any additional, I guess, comments on it, I'll make myself available for anything else. Okay. So. Okay.
Thank you, sir.
Thank you, Mr. Orozco.
Thank you, all of you.
Okay.
Oh, I'm sorry. I apologize. Mr. Moncayo. Mr. Moncayo.
Yes.
I know that you submitted another document. I think I was late to Ms. Avila. Am I correct? But yes. Did you want to discuss another matter right now at this point? I apologize. Okay.
I guess I can probably just mention it real quick. Throughout the course of the audit, we came aware of several comments. Basically, we call them management comments. They're not significant enough to be called an audit finding that's going to make its way to the audit report. And basically, one of them was on the lease agreements. Basically, we're just recommending that you do have written lease agreements with all your leases. And the other comments on capital assets, we suggest that the EDC reviews their depreciation schedule and remove there's a lot of assets in there that might be old and obsolete. Just remove those items out of there if they're no longer owned by the EDC, and basically just clean up the schedule in general. We do mention on those capital assets, most of those items are fully depreciated, so the impact on the financial statements will be minimal to none. But those basically are the two items I just wanted to discuss that we became aware throughout the course of the audit, that we have recommendations for management to work on.
And we can leave this, obviously the quality is, we'll leave this document here with you, and we'll include it also as part of the final report, and so you can have also more time to look at it. Mm-hmm.
And I also do want to thank Ms. Davila, Ms. Pantoja, and Mr. Villarreal for all their assistance, and as well as the city with assistance on preparing the report. I know they came on board pretty not too long ago, but since they've been come on board, they've been helping us a lot, and they've been really moving on getting the audit going. So I do want to thank them on that.
We appreciate you guys. Did you have any more questions or comments?
No, we don't. I'm sorry.
That's it from our end. Yes.
Board, anybody? No. All right. We appreciate your time, gentlemen.
All right, thank you.
Okay. All right. Moving on to item E, presentation of the Buxton studying findings related to retail matching and marketing.
Hi, this is Brian Nemersby. Can you guys hear me okay?
Yes, we can, Brian.
Okay. Blanca, were you going to share your screen for this? Yes? Oh, perfect. Okay. Thank you all so much for giving us the time today. I wanted to kind of walk you through what we've done with the Edinburg EDC team over the last year, and then kind of where we're moving forward with the current project. So, Blanca, if you can move down to the next slide. What we essentially did is we worked out an agreement with Edinburg back in September of 2019, as Edinburg wanted to really get an understanding of its retail economic conditions, as it mentions here, and seek an actionable program to focus on retail recruitment. Edinburg was also interested in understanding the profile of consumers who visit the study area, and then really how the profile changes over time, and how consumers and visitors, where are they coming from, what are they doing when they're in Edinburg, a lot of different aspects of that. And we're going to talk about that here in a couple minutes when we go through the mobile device data that we have that we're working with. But really what we've done is from there, based upon Edinburg's goals, we developed a retail solution that goes in and identifies specific retailers who look for similar household purchasing habits and similar trade areas to Edinburg in terms of where their current locations exist, so that we can work with the city in helping the city recruit those specific retailers. Obviously, that helps with quality of life, sales tax, and all those things are certainly a big aspect of that. And then from there, it also, these tools that we'll walk through, really help to develop retail recruitment as well as business retention. I think that's a key too, is we focus on retail recruitment a lot here at Buxton, as we're based out of Fort Worth, Texas. But at the same time, right now with everything COVID related, we're really focused on working with cities and helping their small businesses retain, their current clients there. So next slide, please. So, and you can even jump one more. So just a brief overview. What I wanted to do is just walk you through a quick little explanation of one of the things that we do at Buxton. So we don't just focus on the specific demographics, right? Sure, the number of people in an area and the number of households and how much money they make. Yeah, I mean, those things are all important and applicable to retail development, but demographics only tell a piece of the story, right? When you have a situation where you've got two different households with a head of household age that's exactly the same, making the same amounts of money, that's great. But what do they like to shop? What do they like to do for entertainment? From a marketing standpoint, how do they like to get their advertisements? Are they social media based? Are they television based? Direct mail? Whatever it might be, That's what we do. And so when you move on to the next slide, it kind of breaks it up for you and shows you. So when you go beyond demographics, you start getting into the weeds of, okay, who are these people? One likes to shop at Sam's Club here in this example versus Costco. You know, one likes to go to the movies while the other one's a Netflix subscriber. These are just some very high-level examples of the types of data that we can do. But really what we use is we use an Experian Mosaic household segmentation system that goes down and dives into, you know, again, all these different aspects. And we take all of the households in America, and we put them into one of 71 different segments, again, based upon all their purchasing habits to get an understanding of that. And then to drive forward, we use that data to match with specific retailers in where they like to locate around. See, again, what type of a fit does Edinburg have for retailer A, retailer B, and so on. So if we can move forward and go, yeah, one more, that's perfect. So what we do here is we look at that first thumbprint, right? So the thumbprint is really a comparison of, again, what types of households do you have and their purchasing habits relative to where retailers like to locate. And so we take all that data. We look at your drive time trade area. Again, where are people coming from? You know, within Edinburg, and then how far out? Do you pull from McAllen? Do you pull from other cities like Farr, Mission, and so on, depending on the retail site that we're focused on. And then we marry those with a number of retail market conditions. Obviously, we look at competition. We look at cannibalization in terms of nearest existing locations to the retailer. We look at retail surplus and leakage. Is your specific trade area showing a leakage of a particular product where are people leaving your trade area to go and do some sort of a service? We look at area draw, right? So we look at co-tenancy, where we're looking at, you know, what types of things do specific retailers like to locate around, and do you have those, you know, within your trade area? And then when we do all that, we process that for thousands of retailers across the nation. We come up with a list of targets. And so what the initial agreement called for was for us to provide up to 40 retail matches over the course of 3 different sites, and we'll walk through those here in just a moment. But to then identify and really kind of go forward from there, how we're going to continue to work with the team to recruit and develop those relationships. So if you'll jump to the next slide, one of the first centers that we looked at our previous points of contact we're interested in were the shops at Rio Grande Valley. What are some additional things? So when we looked at retail matching with all these sites, we take into account all of those different aspects that I've spoken about, but we also work with the team on, so what categories are we looking for? What are the types of things? And there was really a desire for, you know, more sit-down restaurant concepts, to get into the entertainment business a little more. What are some entertainment options as well as retail? What are some good, you know, regional and nationally known brands that are good matches for Edinburg based, again, upon those household types that we can help build a story for? And so this is just one example. I believe we've got 16 different matches on here. They bounce around everything from, home goods type concepts to fast casual restaurant chains to sit-down restaurant chains, to a number of different concepts like that. So we're kind of breezing through, and you can see all those different ones that are on here too. And we certainly provide the team with a bunch of information about each one of these regarding square footage and location preferences, and are they franchised, and all those sorts of things. So some of these you might be familiar with, Home Goods, which is a TJ Maxx Marshalls concept. You might be a little bit less familiar with a Synergy, which is going to be a movie entertainment complex. Yard House is a sit down, nicer end restaurant. Zoe's Kitchen, fast casual. But if you could jump to the next slide, you'll see that we've provided this for 3 different sites. So we had the shops of Rio Grande Valley. There's also interest in developing around the McCall-Trenton area, where I know you've got the Walmart Supercenter over there. You go about, maybe a mile or so west of that, you start getting into McAllen and some of that retail development. But how can we have, sort of a halo effect, right, from all that retail development that's happened there to get these things to come into that Edinburg area? And so these were some additional concepts that worked out well within that specific area. Again, you're looking at different types of restaurants and retailers, a little bit of entertainment there with an urban air concept as well. And then you'll go over to the last slide, or I shouldn't say the last slide, but the next slide of this section. And there was also focus on the downtown university area, right? So what are some things up there? Again, there's another Walmart up there. I believe there's a Lowe's up there. What are some things that we can do up there that would work well, that are good fits and good matches for this specific area? And so again, all together, you're looking at a total of 40 different matches that the goal moving forward, and we'll get to those steps here in a minute, will be to continue to help people like Brian and Blanca, who, again, I know they're new to the city and just coming on, but really helping to work with them to foster those relationships and get some relationships started to where we can go out and say, hey, these concepts need to be in Edinburg. Here's the reason why. And then from there, you start entering into the idea of property availability and some of the other, concepts of working with the city to get those things developed. So before we get into kind of the next steps going forward, I wanted to see if there were any questions or anything that I could answer here kind of first off.
Brian, this is Dan. In your goal with all the businesses that you're going to recommend, was the industrial park area considered as well?
No, not at this point. The three sites specifically were the ones that we focused on. Now, the cool thing, Dan, about one of the steps moving forward is some of the new products that we have in our online platform that's called Scout that will give the team the ability to focus on additional, on the current sites that we've reviewed here, but will give them the ability to focus on literally any site that you so choose within the city of Edinburg going forward. If there's additional areas of matching and recruitment that need to take place, we've got these tools built in that where we can go ahead and implement that very, very easily for them.
Yeah, and let me jump in, just remind everybody why we're doing this. So, I wanted Brian to go through this because this in effect sort of closes out year one of this contract. I mean, this was their deliverable, and he's giving you an overview of it. So, I want to remind everybody what Buxton's deliverable was at the end of year one. Explain what our approach to this work is going to be in year two and year three, and that's going to lead into the next agenda item where we're going to suggest a contract change.
Well, that's awesome. This is Dan again. That's awesome because you guys are going to be my new best friend because all I've been talking about is going after businesses we want in the city. And so you're speaking my language, Brian. Keep it going. Don't let me interrupt.
Okay, well, cool. Well, if there's no other questions, we can certainly move on to the next topic, but happy to keep answering if need be.
I had one question, Brian, just to hear it.
Yes.
Did any of these market studies take COVID or COVID impact into account?
They did not at the time, right? So all of this stuff, we had, kicked all this off back in September of last year. And so all of the matching and all the data run at the time was pre-COVID related. Now, with that said, we've got the ability to look at these relationships, and we know that there's retail that's expanding that will be open for business tomorrow, that will be wanting to talk with you. And there's retailers on that list that we can definitely approach. There's going to be others on this list that are probably going to take a little bit more time to foster that relationship a little bit more. But again, the cool thing too about what we're about to go into is you will have the ability to run analysis on specific time periods. And I'll kind of show that to you here momentarily. where you can take into account and still look at stuff pre-COVID if you so choose, or you can move forward and say, let me look at the data around these concepts within the last 3 months, last 6 months, so that we can really see if things have changed, to get a better feel for how they're doing and how we need to approach them at this time.
Okay, great. Cool.
So from there, if we're ready, we can certainly move forward. But yeah, let's talk future steps. So there's really a two-phase approach here moving forward to this. If you move on to the next slide, we can kind of walk through these bullet points. So this is really kind of the first phase, right? So this is the current matches that we've done the work for. We've got all the contact information for them. We have introductory letters that have been created that we can get sent out at the convenience of the team to, again, get those things started. We have internally professional and resident support that I'd like to, look to connect Brian and Blanca and any other teammates with, that we can work on to, again, walk through and give background on what's the best way to go about recruitment. How do we go from here? How Buxton can help with some of those things. We've got a lady on our team that has been with, an economic developer for 2 decades, and has got a ton of experience in doing these types of things. So, she'll be able to help you, drive the way and drive the conversation on what's really a good time to do this, right? When's a good time to send this sort of correspondence, and then to move from there. We have our Scout platform, which we'll talk a little bit about here momentarily. It's our online platform where you can also track results. With all the current agreement moving forward, we provide full account management support and technical assistance. So any questions about anything related to recruitment, and then all the tools moving forward, we are here and available for the team when needed. That all continues and stays. And then lastly, as we hopefully come out of this, some of the COVID conversations and we can get back to normal, we do provide assistance with, some of the big trade shows like ICSC Recon in Las Vegas that happens every year as well. That's a really, really big one. So a lot of different cities go to that, and we have a pretty significant presence there at the show. And, we certainly are there to help and have meetings between, you and those prospects, as well as having them at our booth if you so choose. Those are a lot of the different things that we all provide with our service. So that's kind of phase one, right? That's the continued progression of where we are with what we've done in year one. If we move on to the next slide, we get to some of the new things, right? And this is where, Dan, I think you'll be really interested in some of this that we talked about. So some new tools that we have in our Scout platform that were just released within the last 30 or so days tie into some of what we're talking about. So Mobilytics is a tool where it says here you're able to analyze mobile foot traffic data with extreme precision. So what you're able to do is you're able to go into Scout and you're able to essentially draw a geofence around a business, a shopping center, whatever it is you determine, set the specific time period. We've got almost 2 years of data in there, as well as select the day part if you'd like, and then get key visitor insights. So once you run the report on that polygon, you're able to go in and capture all the mobile devices that were within that geofence during the time frame that we just spoke about, and you can get all different key insights. You can get psychographic segmentation, you can get demographics, all those different things from that report that it takes just a matter of minutes to run, and you can run it on all these different time frames. If you go to the next slide, you can also get where they visited, where they come from as well. So their visitor origins, you can see, is this specific concept, is this a draw for us? Are we getting a pull from McAllen? Are we getting a pull from, some of those outside towns that are using Edinburg as kind of their destination retailer? Those are some things that you can look at. You can map all the dots and all those households in Scout, as you see here in the lower right-hand corner. And you can also see when they visit, right? Times of day, days of the week, volume per week, how it's changing over time. You know, you might see it where things were steady and then all of a sudden, boom, COVID hit and it dropped, right? Well, what's happened since, right? What's happened over the last 4 to 6 months as businesses have come back in? So Mobalytics, you've got unlimited access and use to that moving forward. 24/7 can run those reports as much as you choose. And so that's one of the new tools going forward that you have. On the next slide, it gets into additional retail matching. And so this is where you'll have the ability to go in on any site within Edinburg and run a match on over 5,000 different brands that we have loaded into our database nationwide. And what it's going to do is it's simply going to give you, and you see there's a number of different parameters here, but really what it's going to do is it's going to say, okay, how do I want to compare my stores or my area? So I can look at, do I want to compare to a concept that's local? Do I want to compare statewide? Do I want to look regionally? And so on. So I can, analyze and match the specific brands. And then as well, what are the volumes of those brands? How busy are they? And then do I have enough of the right types of consumers for those? So what it's going to do is it's going to tell you, is this retailer a good match for my community? And how it's going to do this is it's going to go in and essentially look at geofences for all of those retailers and pull the mobile data, again, looking at mobile device data for those retailers to see, okay, their actual consumers trapped that we caught within their store, do we have those same types of consumers here in the Edinburg area? And if so, are they a good match? And so this is where this tool takes place. And again, where I was talking about the time frame is you can set the time frame on this, right? If you only want to look at the last 3 months, the last 6 months, and take COVID into account, you have the ability to do this. And all of this data with Mobalytics and Match is updated daily, and it has about a 72-hour lag on the data. So we're here, Tuesday evening. We're going to have data through, last Friday or Saturday. Again, all the way back to the beginning of 2019. And that data is always being refreshed. So we can constantly run new matches and new reports on all of these tools as things get updated here as time just moves forward. So it's really, really cool to have the ability to have that flexibility to look at all of this. And then the last slide that I've got for you today is the consumer impact dashboard. So this is just an extra dashboard that we would provide that looks at, again, it's real-time mobile data, but rather than looking at a micro level, it just simply looks at the health of your community at a macro level view. So if you can look at overall level, you can break down categories by restaurants, clothing, department stores, personal care services, Home Depot type warehouses, those types of things there. And just get a feel for what is the visitor activity within my community relative to what took place last year? How is it trending, over the past 6 months? How is it looking at moving forward? And it really gives you an understanding of what your traffic volumes are. You can look at, keeping a balance and understanding of the health of your local economy. It can also help maybe with potential revenue projections. So just some things there that would also be included within that tool. So that would be an additional tool that's included. It's separate from Scout and just requires an additional login, but that's something we'll provide to the team and we'll move forward. So really, as you see here, moving forward, tons of support with what we've done so far, yet also focusing on all of the different mobile aspects of how we can get answers on what's going on right now, real-time data, because with COVID, that's what we need. So that's really what I wanted to focus on for this current presentation. And again, open to any questions or any thoughts or comments that you all have.
So I'm glad we have these analytics, and to be honest, it's a little scary how much data you can collect from our phones.
No kidding. No kidding.
Yeah, I was like, stand by while I turn my phone off.
Yeah, that's right. That's exactly right. Turn those location settings off.
So we would have access basically to this 24/7, or how does that work?
Yes, that's correct. Everything within our Scout platform is available 24/7, 7 days a week. You can run and again, so the matching, the cool about this too is the matching is unlimited, right? You can run, if you want to run 40 matches, you can run 40 matches. If you want to run 20, you can run 20. If you want to run 500, you can run that. And the same with the Mobalytics. There's no limits on all those reports. All those reports are saved within the Scout platform. And there's unlimited space in those as well. So you're pretty limited. The only issue you would ever have would be if you ran it on a really, really small time frame on a really, really, really tiny polygon where you didn't get any devices, right? If there was ever a situation like that. Other than that, you're free to use as so choose to again anywhere within the city and beyond. The Mobalytics stuff, and I mentioned this to Brian, there's nothing that stops you from running activity reports and Mobalytics on stuff outside of Edinburg. The same with those dashboards, that very, very last slide that I showed you. If you want to see how you're doing compared to McAllen, compared to some of your other communities there, you can pull those communities up too and see how they're doing. That's nationwide access there as well. So that's all given to you with all of this. Yes.
So here, and that gets into the next item. Actually, I'll just go ahead and say it now because it's a good. That was a good leading question. But basically, before Buxton was hired in a very traditional consulting role to the EDC. The EDC staff did not have a lot. The people who were staff here, there wasn't really any specialized researchers here, and that's changed. You've got researchers on staff now. So the change we made was beef up access to the data and back off on leaning on Buxton personnel and staff there for our own kind of day-to-day sort of research capacity, because we don't really need to do that anymore. So it's a good trade. You got more internal research capacity and access to more data. And Buxton provides great customer service, so we'll always, Blanca and the rest of the team here, we'll always have everything we need there.
Awesome. So sorry for stealing your thunder on the next one.
Brian, Ronnie Rivera, I have a question for you. The first year that we had the contract with Buxton, what did we get, or what did we do with it? Do we have any accomplishments? Do we have any anything that we got with it, or what's our record with it on the first year?
So Brian, let me jump in and answer that.
Sure, go ahead.
So what you just saw was the deliverable.
Okay.
There was no kind of handoff front to the EDC staff at the time, okay. And no kind of runway there for them to do anything with the information, because by the time that was available, the transition had already started happening. Okay. So that's why I wanted Brian to go over this now, because this more or less is the deliverable for year one.
Brian, this is Dan. My question is, in your analytics and your recommendations, does it already take into consideration the specifications like the size of our cheddars or the what's needed to be able to put that in land we have available in those areas you recommend?
We do, yeah. So within that first group, we've provided the team. And I've got copies of all that too, of square footage preferences for each of those matches, and so that's where you can really kind of go in and marry them and look at, hey, what do we have available? Do we have a large box? Is this something that we can potentially split? Do we have pad sites that would fit this specific type of restaurant concept or retail concept? So yeah, a lot of those things were certainly taken into account, and then from those selections is where you can really kind of customize and drive, really the pathway forward on how you want to proceed with that retail development.
Nice. So I understand this is like a dream sheet, but let's just say we, blanket say, yes, we want them all. How many actually could we put into place with what we have available now in those areas and in those retail areas?
That's a good question, and it can it's fluid, right? Because it really just depends on the availability of those areas. I know that a lot of those property listings are something like Brian and Blocker are kind of working through, and I know they've got a grasp on what inventory that they have, and really it'll be working with them on take those conversations. I mean, from there, the more the better, right? How many of those can we get? It's really a goal of driving how we want that development to work, and then, moving forward, really. So there's really a lot of customization still yet ahead on that. It's a good question, though.
So what's the next step? Let's say we say yes to Trader Joe's or whatever. Are you also involved in that process? Do you have the contacts with them or?
Yeah, so where we would go from there on that end, right, would be to take a group of these and start with some letter outreach, and then provide all the contact listings from them to the team. And then from there, we would move forward and certainly continue to provide recommendations. We're always happy to help jump in and facilitate a call or a meeting where if they want us to kind of explain, what we've done, why we feel this is a good fit, it's good. We recommend, though, that the city take the lead on these conversations, because it's you all that have the knowledge of all of the sites, permitting, any incentives, all of those things, right, are kind of driven by you all. But we certainly are there to partner and help in any way that we can with, any data that we need to provide or anything that we can do to help moving forward.
Correct. Yeah, I agree. The master plan has to come from the city and the lead. I just wondered how far your relationship goes. And just for a specific question, I see you put Costco there. Did you have an area that you were going to recommend Costco for?
That one, it's wherever the site was. I believe that one was up in the university downtown area, right? So that was one that we felt was a good fit up there. The great thing about all these tools is if there's, we could always look and validate and say, well, how does it look in another site within the city too? Is it a good fit there as well? I mean, that was one that we liked up there. But we'll be really versatile moving forward with these additional tools to say, hey, what are the Costco's consumers look like, and how do they fit in this part of a town? If you guys, as again looking at your listings, thought that, man, this might be a better fit over here in this specific area. That's what's cool about this tool.
So there isn't any rendering, right? Of, hey, if you wanted this here and that there, this is what it would look like or whatever. We don't have anything like that.
No, that's right. We don't specifically focus on the renderings. We do focus though on those retailers, and are they even a good fit? Like, so that are we wasting our time here with this specific retailer, or is this one that, yes, I mean, there is data backing the validity that it will be, and it is a match and a good fit. And then from there, you really kind of take it forward with how you want to approach contact and renderings and developments and all those sort of things.
Thank you, Em. I like it. Thank you, Brent.
No problem.
Great. Do we have any more questions regarding the report there, Brian? No. All right. We appreciate Brian, and I guess the next item is item F: consider approval of the amendment of the Buxton contract for retail marketing data and analytics. Brian Kelsey, if you want to take over there.
Yeah, I don't think I need to say much more on this than what I've already said on what's in the cover page. Basically, we reworked the contract a little bit. We reduced the price per year. We got access to more data. We don't need to rely on the Buxton staff just from a pure time element. And so they were willing to kind of back off on the cost there a little bit. So we think it's a good deal. And again, we didn't change the time period for the contract. It's still 3 years. Just a different kind of mix of services and a lower cost.
I think it's a great tool. I'm glad that you with you guys on board, y'all be able to utilize it a little bit better. Are there any questions regarding the contract amendment? Nope. All right, I'll entertain a motion to approve the new Buxton contract.
Motion to approve.
If I get a second?
Second to approve.
All those in favor signify by saying aye or raise your right hand, please. Any opposed,
Aye.
same sign. Motion carries. All right, moving on to item G, the approval of the contract of the sale of real property of 28th Street to Firma LLC for an amount of $625. I don't know, Brian, or if you wanted to take this.
But Blanca, you want to take this one? Or you want me to do it?
You can do that. You can do this
Okay.
one.
So just referring to the cover page of the item here, if you'll recall, back in the August 6th meeting, the board voted to approve a letter of intent from JOPA there. It's a two-part firm. There's one that has the real estate holdings and there's one that has the business holdings. So Frema, I think is probably how you say that, is the real estate arm of that firm. The direction to staff there was to bring back a contract when we were ready. And so we went through, the buyer paid for an inspection. I did the walkthrough on the inspection and was there for that. We included the inspection report in your packet. There are a fair amount of repairs that need to be done to the property. More than the $25,000 we've agreed to reduce the price, the sale price on it. So staff recommendation here, I think would be that it's a fair. I think the end point of the negotiation there, we got to a good place. But it was the 650 was the original offer. We agreed to reduce that to 625. I've got the feasibility and the closing date information there on the estimated timeline.
Perfect. So just so we're clear, the reason for the reduction was because the concessions on the fixing the building up, correct?
Yeah, and there's a list. There should be an amendment that was included in the package, just a one-page Word document that listed in narrative form. And I mean, I'll give you an example. Really, honestly, the entire roof probably needs to be replaced. And just that alone would be more than what we kind of negotiated on in terms of reduction in the sale price. So, I thought that was a fair compromise.
That's fair.
Mr. President, I have a motion. I'd like to make a motion to move the item G and H to executive session.
Okay, anybody want to second that?
I'll move the second.
Okay, all those in favor signify by saying aye. Please raise your right hand.
Aye.
Aye.
Any opposed? Okay, so we'll move item G to for further discussion. So you wanted to move H as well, Dan? G
Yes,
H?
please.
Okay, moving G and H to executive session for further discussion. With that being said, we have no other items in open session. So I'll entertain a motion to enter executive.
So move.
Can I get a second?
Second.
All those in favor signify by saying aye or raise your right hand.
Aye.
Aye.
Any opposed, same sign. Okay, it is 5:42 p.m. We'll be entering executive session.
Okay, moving people into the waiting room.
Okay, they're ready for the countdown.
All right, it is 6:37 p.m. And I will entertain a motion to re-enter open session.
So moved.
Second.
All those in favor signify by saying aye. Raise your right hand, please. Any opposed, same sign. Motion carries. It is now 6:38 p.m. Entering open session. I'd like to entertain a motion on agenda item G, the approval of the contract for the real property on 28th Street. Sabrina, did you say you're on mute?
Yes, I make a motion. I think that's what I heard. I got lost.
Yes.
I got lost.
Yes, ma'am. Do I have a second?
Second.
All those in favor signify by saying aye. Raise your right hand, please. Any opposed, same sign. Motion carries. No action taken on agenda item H. No action taken on agenda item A from executive session. And on agenda item B, I'll entertain a motion for a letter of support for the enterprise zone project.
Make a motion to support.
Second.
Second.
All those in favor signify by saying aye. Please raise your right hand. Any opposed, same sign. Motion carries. All right. Do we have any discussion on anything else? All right. I will entertain a motion for adjournment.
Motion to adjourn.
Second.
All those in favor signify by saying aye. Raise your right hand.
Third, fourth, fifth, sixth.
Any opposed, same sign. Motion carries. All right. We're only 39 minutes over this time. I'll get better, I promise. All right. Thank you, everyone. I look forward to seeing you.
Thank you, guys. Thank you, Blanca.
Thank you. Take care. Bye-bye.
Good night.